Welcome to Biotechonomics TV. Today we're going to talk about year-to-date venture funding in life sciences during 2021 through the end of July. So during the month of July, we saw $2.9 billion invested in U.S. life sciences. And typically, the U.S. accounts for about 70 to 75% of all venture funding in life sciences, with China being number two, taking up another 10 to 15%. But this is a slight decrease on a monthly basis than we were seeing earlier this year. So we saw about $11.5 billion raised in Q1, $10.1 billion in Q2, and then $2.9 in July. So you can see the run rate on a monthly basis has fallen from about $4 billion earlier this year to just under $3 billion last month. So a drop of about 25%. Now you might be wondering what's going on, why is this happening? Well, one of the main things that's been driving this is we have seen biotech sort of come down to earth this year. After many years of the XBI, the Biotech ETF, outperforming the S&P 500 ETF, last year, biotech outperformed the broader S&P by 40 points. This year, that trend is reversed. This year, the XBI is underperforming the broader S&P by about 30 points. So we are seeing biotech sort of correct itself a little bit, even when we haven't seen a similar correction in the broader markets. So that sort of makes sense that we start to see things level off. At the same time, we've raised almost $25 billion year to date through July, which is about what we raised last year, which was a record year. So we're still on pace to have a record year and should easily finish somewhere in at least in the mid-30s for the entire year. So one of the interesting things is geography. Earlier in the year, we saw a lot of deals coming out of Boston, especially at Curix, who recently announced they're going to go public through a SPAC, but they raised $500 million earlier this year. We've had deals recently, though, larger deals coming from the Bay Area. Pivot Bio, for example, raised over $400 million last month. And we've seen similarly large deals starting to happen on the West Coast. Now, those who've been in the industry a while know that typically these things tend to swing back and forth. So I wouldn't say the movement during this year from Boston to San Francisco is anything other than another temporary swing. Certainly not really anything to suggest it's a long-term trend. Now, also behind that, lab rates. What we're really starting to see is Boston, Bay Area, San Diego, market-wide, starting to really run away from the pack in terms of lease rates for lab space. So a lot of cities now, we're looking at converting office space. Even downtown San Francisco has got 17 million square feet of available office space. So there's a lot of landlords and building owners looking to do conversions to lab space. Boston Properties, one of the largest office REITs, is looking to get more active in lab sciences. However, the three main markets are really starting to separate from the pack. Relay Therapeutics did a lease earlier this year in Kendall Square at $110 a foot. The Economist actually recently ran an article talking about how leases in Kendall Square are going for something like $160, and I can't say I've seen that yet, but obviously these leases do have 3% annual escalator clauses in them, which means that 110 on a 10-year lease is going to get close to 150, 160. In the Bay Area, we've seen rates start to break through that $70 barrier. So a number of deals done earlier this year, especially down in San Carlos, the New Alexandria properties, like with Iovance and Codexis going in at about $67 a foot. Last month, we saw Encarta, the car and K company, do a lease in South City at about $77 a foot. So the Bay Area is starting to pop up through $70, where it's a little bit stuck for a while, and very likely going to get close to 80 here. Now, I should point out in the Bay Area, this is all happening South City, Emeryville, Peninsula, not the city of San Francisco. There's still some reluctance among lab tenants to go into San Francisco unless they get a significant discount for a number of reasons, but this is happening even around Mission Bay, where the UCSF campus. San Diego saw Sereno Therapeutics do a deal recently at $61 a foot. So we're seeing San Diego, especially that La Jolla, Torrey Pines area, really starting to pop through into the 60s, separating itself from the pack. Pretty much elsewhere in the country, the only other place you're going to find really expensive rates would be right in New York City, especially on the east side around Roosevelt University, and Seattle, South Lake Union. But really, the big three markets have seen a slight decrease in share this year to about just under 70%, around 70% of funding, which is down about 5-6 points from last year. So there has been a little more spreading of funds on a percentage basis to other markets. But not only are the big three markets now leading in venture funding, it's having this additional impact that their lab space is now anywhere $20, $30, $40, $50 more expensive than the rest of the country. That's it for today. We'll talk to you soon. Please subscribe, and thank you for watching.